Hi, this is P R Sundar. Welcome to this special episode where I'm going to talk about the long-term outlook for Indian markets. The thumbnail says 25K in 2025. Okay, first let us look at the broader picture. What happened in 2008? There was Lehman Brothers collapse. The markets all over the world crashed. And what happened after that? Just 1 year later, and Nifty shot up more than 100%. During the Lehman Brothers collapse, it fell about 50%, and from that low, in the following 1 year, Nifty shot up more than 100%. What happened in 2020? Coronavirus. Again, Nifty fell. I think Nifty fell about 40%. I think Nifty went to around 7,500. Once that coronavirus thing subsided, what happened during the next 1 year? And Nifty shot up more than 100%. From 7,500 level, Nifty went to 18,600 by October 2021. And more or less, the global markets also did the same thing. I always say, if there is a significant fall, so the following year, the Nifty is likely to give very good return. Just to give you an analogy, like you stand on a 20-floor building, on the top of the building, drop a ball. Once it touches the floor, it rebounds. But the rebound, cannot be 20-floor high. But the market can shoot up 20-floor high. In fact, before the coronavirus, I think the Nifty was around 12,000 something. Then came to 7,500. The rebound was to 18,600. That view. Now, let us see what happened since last year. After Nifty hitting 18,600 in October 2021. And till today, now this video is being shot on 19th of October. And this is exactly 2 years. In these 2 years, Nifty shot up from 18,600 to 19,600. Just 1,000 point. And 1,000 point is not even 5%. So, in last 2 years, Nifty is up only 10%. That is 5% per annum in simple calculation. If you look at CAGR, it will be even lower than that. In the last 2 years, the Nifty has given a CAGR of only about 4 to 4.5%. That is a very, very pathetic return. Even the bank FD would have given much better returns. Now, this is again, this 10% in 2 years is also, that is only in the rupee term. And during these 2 years, I think rupee has depreciated more than 10%. So, if you look at the dollar terms, the return is almost zero. And not only Indian markets, you look at most of the markets. Look at the US markets. The most traded index in US is S&P 500. You look at the 2021 October and now 2 years is zero return. UK market has done slightly better, but look at the Germany, France, and many other leading markets in the world have given only zero return in last 2 years. Okay, there were many such blocks in the history where they have given zero return, but why are we talking about zero return now? That is because in 2022, the markets all over the world crashed. First, there was Russia-Ukraine war. Then after that, US inflation shot up to 8.99%. That has never happened in the last 40-year history of US markets. And Nasdaq 100 fell about 60% from the high of about 16,600. It came down to a low of 10,500. So 50-60% fall. That's worse than the Lehman Brothers collapse. So, when so much of a bad thing happened in 2022, what people expected markets to deliver a huge return in the year 2023 following the crash in 2022. But that has not happened in any of the markets, including Indian markets. So that is because the Lehman Brothers collapse, one big problem came and settled in few months. Coronavirus, it came and settled in 6-7 months. But now this US inflation, US rate increase, keep on going on for many months. But however, once this thing is settled, if not this year, at least in the next year or the following year, and the markets all over the world are likely to give huge return because they have fallen so much. Nifty, as I told you, it looks as if it has gone from 18,600 to 19,600, but in dollar term it is still negative. And even otherwise, Nifty has not given a return that is better than the FD return. And I really don't know why everybody want to come to stock market. Historically, Nifty has given only 1 or 2% more than the public provident fund return. But if you know when to enter and if you know when to exit, then you can make very good profit. So in that sense, I feel that now it is time to enter. And why? Because the US inflation has already peaked. US interest rates, we do not know, but it is more or less peaked out. Even the Fed chairman says there may be only one more rate hike of a 1/4 percentage point. Then after that, conservatively he says the rates may stay longer. Normalization will come only by 2027. But I think that the Fed chairman is too conservative. I think the rates must come to normalization by 2025 end or 2026. And if that happens, stock market will always factor in all the bigger events 6 months to 1 year in advance. So therefore, I feel that the next 2 years from 2023 to 2025, the markets are likely to outperform other asset classes like fixed deposit and other things. So if you believe in this story, so you can start investing, but you don't invest lump sum money. So you just invest some through SIP, and markets are likely to give good return over the next period of next 2 years. But however, what are the risk factors? Number one, the past performance, there is no guarantee for future performance. So markets rebounded after Lehman Brothers, markets rebounded after coronavirus. Now, there is no guarantee that market will rebound after this US rate hike things are over. The second thing, this is India specific. So there is a parliament election in 2024. So that is a bigger risk. But people are always ask me, sir, what is your opinion? Let me tell you my opinion. If BJP wins or NDA wins, the markets will go up. If Congress wins or India coalition wins, the markets will go up. In fact, market will go double up. And because Congress is considered as a stock market friendly party. So if BJP wins also, market will go up, and Congress wins also, markets will go up. Then when the market will go down? In case if there is a hung parliament, if neither NDA nor India forming the government, so then the probability is very high, the markets may crash, maybe 10 to 20%. So political risk is there. Then Russia-Ukraine war is still not over, continuing. Technically, South Korea is in war with North Korea for last 40-50 years. And Russia-Ukraine also continues for last 2 years. Now this Israel-Gaza conflict has started. So, as long as these are all like standalone problems, no issues. But how the World War I started or how the World War II started, so it started between two countries, then other countries joining them, so that's how they became a world war. So of course now the things are totally different, unlike 2000, like World War I and II, but things can happen. So geopolitical tension, parliament election, so these are all some of the risk. There is always a risk. That is why you have the reward in stock market. So in my opinion, so next 2 years markets are going to be good just because last 2 years markets have not been good. So that's it for now. Hope you enjoyed watching this video. Thank you for watching.